Start with Retail. Loop Capital's Laura Champine has a preview of Home Depot's results. Welcome to you both. Laura, you have the results. You can tell us what they're going to say?
Not exactly, but I do know. Right, it would be wonderful, I think, although maybe not so much this quarter. I do know that most analysts expect sequential improvement this quarter and next, which might be tough for them to pull off. One of the smaller companies we followed since their IPO years ago, LL Flooring, just announced Chapter 11 today. They made it through the financial crisis, so we don't think we're out of the woods yet, at least on big ticket renovations.
And how much further should we, kind of brace for weakness, and how much of this weakness is already priced into the stock or should be?
Right. I mean, as you mentioned, the stock's been sort of flat in a market up double digits year to date. I think it's mostly priced in because once interest rates do start to come down, I think we're off to the races on this group. I just think it's too soon to get excited because the fundamentals from our perspective are not showing improvement yet. And they really are as bad on a multi-year basis as the numbers were. Some of the metrics around ticket, big ticket home renovations, as weak as they were in the 2 years of the deepest years of the financial crisis.
Wow, is that so? I mean, in some cases we have to say, okay, well, they were so high during the pandemic, a sugar high, if you will. I think maybe Jamie Dimon once used that term. So a reset is to be expected to some degree, but this is still quite a significant one. If you look out then and say, okay, when do you gain exposure? If the rate cuts are coming next month, why not step into the stocks now? We're getting close to that point at which you think then all of a sudden they could take off, right?
Well, we definitely want to get tomorrow's catalyst out of the way and next week for Lowe's and see what they have to say. Even once rates start moving down, it's usually about a 6-month lag before you start to see backlog fill in with projects again. So I would sit on my hands at least for until we get to next month. There'll be time. I don't think now is it.
So we've seen, every now and then, stocks like the home builders can take off literally 20, 30, sometimes 40% going back a few years from the lows. You don't think this is going to be something like that?
I think that it will be once we're certain of a turn, and I think we're not quite there. If you think about it, this makes sense because COVID, there were so many renovations. You're not going to go back and replace your kitchen and bath twice in a 5-year period even. So it might take a while for demand to recover. Most of the investors we talk to are thinking about, will next year even be an up year? We think it will be for Home Depot and Lowe's, but it is getting close. We'll need a reversal pretty soon on rates.
And given that most of your coverage universe falls into this category, are there any stocks where you feel relatively more optimistic?
Look, I'm going outside of home for our buys. I really love off-price. I think TJ Maxx, Ross, Burlington start to report next week. We think they're taking a lot of share, picking up, especially from the department stores who've been donating share for a couple of decades now. But it seems to have hit sort of an inflection point, and they've learned to update their assortment for higher price points to help that trade down customer when they come into the store.
So if I asked you, if I'm the president or whomever, head of the Federal Reserve, and I call you and say, what's going on with the consumer? Can you tell, or can you disaggregate it from the post-pandemic hangover effect or normalization effect?
It's not getting better. Seems to be getting worse sequentially. And some of that may just be a stretch of inflation, energy bills with the summer energy bills coming in. I think it's some exhaustion around discretionary items. But except for that trade down customer, we think the consumer's under a little bit of pressure right now.
And any idea why that is? I've mentioned this a few times, but we saw this note from Barclays last week, more for specialty retail, where they said, look, the positive catalysts are kind of behind us now, and we're just going to have to move into a holding pattern. So, for the macro takeaway, is that because excess savings have run out? We've had real income outpacing inflation for the past 9 months or so. Is the labor market slowing more than we realize? I wonder.
I wonder that too, but remember, election years are never great for the consumer. So we're not in a great period in Q3. Then we hit the holidays, and we've got 5 fewer days this year between Thanksgiving and Christmas. So we're just not getting any help from the calendar, either electoral or just the calendar in general.
Yeah. So you think there's a measurable effect? Because Amazon called this out in its earnings and said there's the Olympics, there's the election cycle, people are distracted, and critics weren't so sure whether to take that seriously. But you think that's a real effect?
not so sure about the Olympics, but I'm pretty sure about the election. I think just so many consumers on edge, whether rational or not, just worried about what's going to happen, whether it's tax policy, trade policy. This level of uncertainty, especially how polarized we've gotten, it's not great for consumer spending.